This is an Uncover Japan Company research report on World Holdings, ticker 2429. It is a Fukuoka-based group whose staffing engine supports Japanese manufacturing, while property development creates both profits and the central balance sheet risk. At the report's reference date, World traded at roughly 6.1 times forward earnings and 0.88 times book value, alongside a forecast return on equity of 14.1% and a 5.8% dividend yield. Those figures make the stock look inexpensive, but they also reflect the market's concerns about leverage, property inventory, and earnings volatility. This image captures the business in one frame: manufacturing support, logistics, and apartment development. World Holdings supplies dispatched and contract labor, increasingly including outsourced engineering, to sectors such as semiconductors and automotive. It also develops and sells residential property, with small telecom and agri-park businesses adding further diversification. Revenue increased from 154.7 billion yen in fiscal 2021 to 284.4 billion yen in fiscal 2025, a 5-year compound annual growth rate of about 16.4%. Operating profit dipped in fiscal 2024 amid shocks including semiconductor weakness and automotive disruption, then recovered to a record 10.8 billion yen in fiscal 2025. The two HR segments account for roughly 3/4 of sales. Products HR, focused on manufacturing, was 43% of sales with a 3.6% operating margin. Service HR was 32% with a 2.5% margin. Real estate was only 20% of sales but earned the highest segment margin at 6.4% while consuming much more capital. The report identifies World's real advantage not as diversification, but as a talent supply network in Kyushu, industry-academia partnerships, and a roughly 1,000-person Kumamoto training pipeline help it prepare workers for semiconductor demand. Co-sourcing and contract engineering move the offer beyond simple labor matching, while group scale supports large orders. The moat is genuine, though still exposed to the chip cycle. Operating profit fell to 8.6 billion yen in fiscal 2024, before recovering to 10.8 billion yen in fiscal 2025. The report cites fiscal 2026 guidance of 12.5 billion yen. Yet the quality of those earnings is shaped by property timing. Roughly 40% of assets are property inventory, and the report estimates gearing around 180%. Management's strategy has two engines. First, it aims to turn semiconductor training into durable manufacturing and engineering orders. Second, it is shifting real estate from one-off condominium sales toward leasing and rental management income. The intended result is a more recurring property base that can stabilize the cash flow that makes the group hard for the market to value today. For investors, the monitoring list is concise. Semiconductor demand must keep translating into staffing orders, and property must become a stabilizer rather than a source of inventory and financing stress. Rising Japanese interest rates are a direct headwind to the group's leveraged property exposure. A stronger capital return policy could help narrow the discount, but it would not replace operational delivery. This chart presents the report author's scenario arithmetic, not a price target or recommendation. The 3-year bear case is approximately 2,158 yen, versus a base case of about 3,963 yen and a bull case of about 6,908 yen. The base case depends on both earnings growth and a partial return toward the company's own historical valuation range. World Holdings combines structural tailwinds from Japan's labor shortage and semiconductor investment with material balance sheet risk. The report's balanced conclusion is that it may be over-discounted for the fundamentals, but the risks are commensurate. Investors should follow property inventory, sell-through, semiconductor orders, rates, and progress against full-year guidance. World Holdings is a fast-growing, founder-led group that combines a semiconductor-levered staffing franchise with a property-heavy balance sheet. Its low valuation reflects real risks as well as potential. For the full report series and source context, visit Uncover Japan. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.